Welcome to another weekly market update. This is a Saturday, the day after the market closed on August 25th. I'm traveling at the moment, so apologies if the sound quality isn't as good as normal, but hopefully you can still hear me. Let's go with the weekly chart of the S&P 500. So here's where we look every week at the big picture of what it's doing for the stock market, because that affects everything. Anyone who's got a pension, anyone who's interested in money, it's going to affect you. So you need to know what kind of market we're in. Is it a bull market? Is it a bear market? So that you avoid getting killed in another 2008. So stock market is important to everybody. And here's where we look at what the market's doing overall. Little vertical bars here is the week-to-week action, the price action, and they're smoothed out here by these moving averages here, the 40-week and the 70-week average price. So as we can see, there's no doubt about it, it's still a bull market. The price is above the more 40-week moving averages. The 40-week moving average is pointing up nicely. What's been on my mind since last November is that when we are going to have what any healthy bull market has, which is a good old correction to shake out the dumb money. And we've been waiting a while for that, but it looks like it might have just started to unfold. Because last week I identified a break in the upwards trend, which should signal some kind of sell-off for the short term to keep the thing on the rails. So if I draw that trend line now, here's where I was coming from, and there's where it's been going, and you see it's just dropped below the week 2 weeks ago actually, and then followed through this week, which isn't abnormal. It's had a little bit of a bounce upwards there, but it's still out of this channel. So anything can happen, of course, but it's now going to try and get above there. But what's probably more likely is that it turns back round, and then we get on with this correction at long last. But let's have a look at the day-to-day chart and see we're going to see. This is the same sort of chart, only just the last 6 months now, and we can see day-by-day action here to get a maybe clearer picture. And this week there's that bounce, but then a couple of little sneaky little down days here. We're on higher volume, so that's some institutional selling going on, more days of distribution. More importantly, this thing cannot get, before it's gone below the 50-day moving average, it's bounced up, and again, this one is definitely struggling to get back above its 50-day moving average. There's the RSI. It's still kind of just flirting around no man's land there at the 50% line. But let's have a look at that, because you see what we are seeing there with the RSI at the top there, which is kind of like a health gauge indicator. I can draw trend lines here as well as on the chart, and you can see that we're actually in a downwards trend, and it's grinding downwards still. There's that trend line. I don't need to draw again. I draw on the weekly chart, but let's just do it. So there's the line, something like that. The upwards trend it's been into, bouncing off of it, and then last week it breaks below. This week it has an attempt at a bounce, almost makes it over, but still struggling to, every time it tries to get back above it, it's turning around. Case in point on Friday actually, which is it's kind of like someone falls through the ice, like a hole in the ice, and then struggling to get back up again. What's more likely now is, if it can't climb back above there, it's looking increasingly like this thing just goes down, has a good old proper correction down into this sort of area here. So big picture then, no question about it. The long-term picture is up. It's a bull market. Short-term picture, I think, still remains down. We should be getting a correction here, although it's a stubborn one. I will say it's definitely hanging around. But technically, this still points to downward short-term trend. Let's speak to you next time.